Thank Mike for a very nice informal introduction. I tend to do this pretty informally. There are a lot of slides. They've been prepared with people viewing them after the event in mind, as well as what I'm going to say. So I'm going to simplify what I talk about. There will be more data on the slides. Don't be surprised if I don't cover every single piece of it. There's the disclaimer. That's gone. So first of all, set the scene. For those who don't know Solo, we are a portfolio investment company in oil and gas. It's run by oil and gas people, and our aim is to identify opportunities which present particular characteristics, which I'll come back to, use our own skills to actively manage, to assist the operator. We're not an operator. We don't go in the field and turn the valves. That's not what Solo does. It invests. It then works with the operator to deliver the results, using our expertise where we can. We expect the portfolio to grow, and we then expect things to be being sold out of the portfolio as well as bought in. At the moment, we're still in a portfolio growth phase. That's the team. And when I say that's the team, that is the team. There is no one else. There is not 50 people behind here in this company. It's a very low cost, operating cost. We buy in skills when we need them. The skills of the team, I'm a geologist, 40 years in the industry. Fergus is an engineer. Those are the two key skills, and a finance director. Actually, Dan just joined us about a month ago. So we have our new finance director, and our old finance director has stayed on, Don Strang, as a non-exec. So that's the team. This is really a reiteration of what I said before. It's a portfolio development company. We're looking only in the oil and gas space, only as a non-operator. We're looking for undervalued or overlooked opportunities where we can leverage the knowledge of the existing operator. Now, if you're an operator, and Mike mentioned I'm the chief executive of LGO Energy, we're in Trinidad, you expect to find, and you will in LGO, a team of people with many years of experience of working in Trinidad who know the local scene. We don't have that. I've just told you who's the team here. What we have is the operator, and what we do is manage the operator. So we're looking for very competent operators in the areas where they're delivering the asset performance, and we leverage that. And then we're raising capital, and we're applying that capital where it will add value, and closely monitoring, as I've said. So where's the portfolio development at the moment? This is the extent of it. We've been developing the portfolio for a number of years now. Our principal investments financially have been in Tanzania. We were an early mover in Tanzania. Tanzania is now known with Mozambique as a big gas province. No discoveries of any scale had been made when we started investing there 6 or 7 years ago. We have 2 investments there, and I'll come back to those in detail. We've been more recently investing in the United Kingdom. We participated in the much talked about Horse Hill well, which I'll have some remarks about, and we're now moving into a new license in the Isle of Wight. We have an investment in Canada. It's currently dormant, and a seed investment in Nigeria, also dormant due to very different factors in that case, both of which I'll cover briefly at the end of this talk. I can't read that. You probably can't either. I take a couple of things away from that. Our share price performance over the last year has been essentially flat. Actually, flat is the new up in oil and gas, so I'm not unduly concerned by that. I much would prefer to see us trading at a significant multiple on that, and perhaps I'll explain later why I think we will be in the not too distant future. But it is essentially flat. Our market cap is just under £20 million. And recently we added a strategic investor, the Epsilon Investment Fund out of Singapore, have bought a 15% interest in the company. So let's talk a little bit more about Tanzania. This is where we spent the most money, spent the most time, and have the most mature part of our portfolio. A couple of remarks about Tanzania first, and I won't repeat everything on this slide, as I said earlier, but there is enormous growth in gas demand in sub-Saharan Africa, and Tanzania is no different. In Tanzania, there is a new government. We are finding that new government supportive. Tanzanian governments have always been broadly supportive, but not particularly effective. We believe the current government is shaping up to be a force for good. There is infrastructure. I mean, one of the problems with gas projects is they get stranded. You find the gas, but you can't connect it to the market. Tanzania has about 55 TCF of gas discovered. That's a very large volume of gas. That will never be used locally, not in the whole of East Africa or even in sub-Saharan. Hence, there is an LNG dimension to Tanzania. We're not playing in that. We're playing onshore, where there is a pipeline built by the Chinese to take our gas directly to users in the populous north. And there are major players involved in Tanzania. They're not playing the onshore, the part that we're involved with, but they do shape the politics, they do shape the environment for law and let's say governance behavior, which is positive. Local growth in energy demand, like most African countries and certainly well-managed ones, there is still a very large demand for new energy. 40% of Tanzanians do not have electricity delivered to their home. So this is a market that we can see predictable growth. This is an external report where we're looking at enormous growth potential. So you have the elements. We have made discoveries, which I'll touch on in a minute. We have infrastructure between those discoveries and the market, and we have a growing demand for the energy, both regionally and specific to energy, electricity in Tanzania. This is the project that's on stream now, Kiliwani North. It's on Songa Songa Island. Songa Songa Island has the original gas discovery and production in Tanzania, the old gas plant, and the field for that is located here. We and Aminex, our partners, discovered the Songo, let's say south. This is looking south here at Kiliwani North, and we had a new gas plant built to process and transport that gas to the market through the pipeline system. So that's underway. We have a gas sales agreement. The price is agreed. We've been receiving revenue since August. So that's the backbone of our revenue in Trinidad. But the real value lies in the Ruvuma Basin, which is the remainder of the onshore south. I don't think this comes out particularly well, but we have the Mozambique border here. This is a marine area. Our two licenses cover the onshore, and we've made a significant discovery at Notoria here. It's been explored over a number of years, but really only 2 wells have been put in here, so the word underexplored should figure in our thinking. That discovery, Notoria, was tested at 20 million standard cubic feet a day. That's about 3,500 barrels a day of oil. We only tested a 10-foot interval at the top of the reservoir. We are now going back to appraise this. We're going to a location about 1.5 kilometers away for Notoria 2. It's up dip, it's higher on the structure, and the reservoir is predicted to be thicker from the seismic that was acquired in 2014 to carry out this appraisal campaign. We also expect to do a Notoria 3 appraisal after that. Depending on the results, we'll pick the location for that. This is a significant discovery because it's larger already than Kiliwani North, which is on production and giving us revenue, but has an upside in the order of 1 to 1.5 TCF. So it's a very significant discovery onshore. Now, if we're talking about that offshore, you'd be kind of struggling with your economics and how long to get an LNG project in maybe 10 or 12 years' time. But here we're just 18 kilometers from that new 36-inch line up to Dar es Salaam. If we can prove this up, there is a ready market growing. The market is not all there yet, but as gas becomes available, people will build the power plants, and certainly the end user demand is very much present. That's just a recap on what that pipeline looks like. It's a $1 billion project built by the Chinese using Chinese loans to the Tanzanian government. It was commissioned over a year ago, and our molecules, our gas, are traveling up that pipeline now from Songa here to Dar es Salaam. But the pipeline comes all the way from the south. Here's your Mozambique border again. And here's our 2 licenses where we've made the Notoria discovery. There is one other producing field, Manazi Bay, which is also joining that pipeline. So as that demand grows, as the distribution from the end of the pipeline is built, we will continue to have a ready access to a market. So that's the Tanzania story. The UK, Horse Hill, huge amount of hype about this, and it clouds people's understanding, I think. Solar, I hope, has always been cautious and realistic in what it said about Horse Hill, but even so, it is an incredibly important discovery, proving that the Kimmeridge limestones in the northern Weald Basin are naturally fractured and produce at acceptable, quite exciting rates of, say, 800 or 900 barrels a day on test is very, very significant. Now, people will remember 100 billion barrels and all kinds of nonsense. Of course, there's a lot of oil. There's a lot of oil in all source rocks. The problem is, how can you get it out? What is the recovery from this? And how are you going to do it? I can't answer those questions today, and nor can anybody else who's involved in that group. But with the test results that we had, I think they may be on this one. We haven't put up the numbers, but from the Kimmeridge alone, 2 tests at 600 and 900 barrels of oil a day, free-flowing, and from the Portland sandstone, a conventional reservoir, 320 barrels a day, limited by pump capacity. This is a very major discovery. But of course, it's 3 kilometers from Gatwick and has its problems with permitting and so on, and it will take time to move it through into commercialization. We made the first step, which is to prove that it's there. The next step is long-term test, and the step after that, hopefully a development. Exactly what form that development will take and what recovery factors you can get are yet to be determined, and it's too early days for that. The oil is light, sweet, crude. When I give this talk in the south of England, in the home counties, I say, we moved it to the refinery, processed it, and you've probably used it in your car. Probably not true in Edinburgh. We don't move petrol that far in this country, but it is already being used, and the potential is enormous. And we're going to roll over our expertise and our investment from Horse Hill into our new license in the Isle of Wight. The Isle of Wight is not as virgin territory as people might think. There's been a lot of drilling there, and at Rutson in the 1970s, British Gas found oil at the time based on the logs they had and the oil price. They did not pursue it. We believe that is now a commercial discovery, and we'll go back in and appraise that. There are other prospects in the Isle of Wight. So, this is part of developing a portfolio. We've done Horse Hill. We've added considerable value there. At some point, we may choose to roll that investment over. This is probably where it will go. I promised to, because everybody wonders why we've made other investments. Well, Burj Africa was actually started out as Pan Minerals in Switzerland. We made an investment. We believe still today that the opportunity to get into what are called marginal fields in Nigeria, one of Africa's big oil provinces, is something that we should try and participate in. Unfortunately, I'm going to call it an undeclared civil war that's going on in Nigeria, is in the Delta area, is making it difficult for the government, if indeed there is a functioning government, to start to license these. These fields were taken off the majors because the majors did not value them and given to small companies. But we're stranded by politics at the moment, but we have a local expert operator, and we have partners lined up that if the politics improve, our seed investment can be reactivated. And in Canada, we made an investment in a reef, an old carbonate buildup, which had oil and gas in it. We know that. We drilled 2 additional wells there quite successfully. Unfortunately, the project in totality has ground to a halt because the operator currently is not solvent. So we are looking for ways to reactivate this project. We still own it. We own 28% of the leases, and we're looking for ways to put this back on stream. We know the oil's there. So if I can summarize that, I've left myself 3 minutes to do that. And here, unlike the previous ones where I said I'm not going to read everything that's on the slide, I will go through kind of every point on this. In Tanzania, we have had success. We've drilled 2 wells, the Konde one, which we farmed into, Tullow were the operator, and we found gas and oil, but not in commercial volumes, so residual oil and gas. We moved on to Notoria. Tullow had made a decision to strategically exit Tanzania, and Ammonex took over as operator. We made a discovery. In fact, Tullow drilled the well to 2,000 meters and then exited the concession, handed over the keys to Ammonex, and we and Ammonex drilled another 600 meters to make the discovery. I don't think Tullow were particularly upset because it was a strategic decision for them, but for us it was a major step in our value generation. Commercial gas, we're calling it commercial. I think Ammonex are being a bit more, let's say, prudent at this stage. I'm confident that with this market, with that pipeline, and with what we've already booked in terms of reserves, this is a project which will be commercial, but it could be a lot larger, hence the 2 appraisal wells that are being planned. And we're producing at Kiliwani North already and taking revenue from that. In the UK, we've drilled 1 well. It was successful. The flow rates were spectacular and unexpected How we go forward with that particular development, we will see. And then the Isle of Wight is the next thing up in the portfolio. In Nigeria, we're waiting on the political scene to stabilize, and in Ontario, we need to reactivate that project if we can. And we continue to look for other opportunities to add value into the portfolio. There is a lot of distress in our industry at the moment, and we are looking at quite a lot of opportunities. Whether any of them match the expectations or strategy that we have laid out, and indeed whether we choose to fund them at this time is unknown. But we continue to look in order to put low-cost opportunity onto the balance sheet. So that's my presentation. I'm happy to take questions, Mike.
Thank you. Any questions, anybody? No hands going up? Well, I'll start with some then. I like cash flow. Now, you know I do. What's your cash flow position with solar? I mean, obviously, you're producing gas in Tanzania. Obviously, it's newly delivered. But,
yeah, we bought a 6% interest. We've taken that up to about 7%. We have now the right to take it up to about 8.5%. On 8.5%, we would expect to be getting a cash flow of about $150,000 a month. So that's the target. At the moment, that with a low cost of operation that we have, our listing costs and a small team, that will pay our G&A. We won't do a whole lot more than that. It's not reinvestment money at this stage. The Notoria production, if it comes on anywhere near the envelope of expectation, we're talking multi-million dollars a month of revenue from a Notoria development.
And how much investment would you have to make for that? Have you sort of
Well, there are two ways you can invest in oil and gas. One is with money that you've raised from the market or from debt or wherever. The other is to use the value of the project as it grows. And of course, coming in early, we didn't pay very much for our 25%. So we may dilute. That has been mooted in the past and is still one of our options going forward is you will farm down a portion of your 25%. We will do that at some stage. Certainly when we get to development, if we're doing a $200 million development, that's the time. But we'll have added a lot more value by discovery, by appraisal, by proof of concept before we do that.
And what are the reserves for Tanzania? I see 4 TCF up there.
That's a nice sort of headline number. Yeah. The bookable reserve from Kiliwani gross is about 40 BCF, so that's a lot shy of 4 TCF, and about 4 times that in Notoria 1. Okay. Once we've drilled Notoria 2, then ask me the question again, and hopefully we'll be talking several hundred BCF and ultimately a TCF or more. The 4 TCF relates to additional prospectivity within that license.
And politically, is it quite stable?
Yes, it's a democracy, functioning democracy. The government has struggled with things like foreign exchange, for example, governance, corruption issues, but only to an extent that we find quite acceptable. It's a functioning democracy working quite well.
Okay. Anybody got questions? Oh, 2 hands now. Gentleman there and then gentleman there.
I'm sorry if you already said it, but if you could repeat, when did you make your initial investment into Nigeria?
Into Tanzania. It was one of our early investments. It was the first well, Lakonde, was drilled in 2010.
2010.
So 6 years ago.
When did the civil unrest stop things from progressing?
Sorry, did you say Nigeria?
In Nigeria.
Oh, Nigeria. I heard Tanzania. I apologize. Back up there. We made our first investment into Nigeria in 2013, and the current round of civil unrest, which is, it's kind of an ongoing story in Nigeria, particularly in the Delta region, kicked off about a year ago when Goodluck Jonathan was displaced.
So was it just a decision that was made because of the sizable investment or percentage that you was able to get versus the actual political climate?
Yeah, at an early phase, the thing about Nigeria is it's a fantastic oil province. There's a lot of oil there. A lot of it is discovered. We don't have to take this exploration risk component. It's already there. The government took the decision to relicense a lot of it. They took this acreage back from the majors, Shell, Chevron, and offered it up to the industry with an indigenous component. You had to have an indigenous partner, which we have, and to get more activity, to get more production. And that process was going well until the change of government, and now under this government and the unrest that has developed within the Delta region as a result. It's a complicated security story as well, and it's not necessarily a place you'd want to be putting people on the ground at this time.
Last question, gentleman over there with the microphone. The microphone is coming to you.
Thank you. Hello, Neil. We're shareholders, small shareholders. You mentioned that we have at Kiliwani up to 8.5%. We used to have up to 10%, but you made the decision not to go for the next tranche. Yep. When I did the back of the fag packet calculations, I don't have the numbers, but with 10%, we would have been doing quite well as a company. Why the decision not to take that last tranche?
Two reasons. One is the current market conditions in oil and gas, as you well aware, are not favourable to raising money, and therefore we felt with the size of the Ruvuma license prize relative to an additional 1%, 1.25%, we actually decided not to take. We should protect our cash position and be fully funded for the Notoria appraisal program. So that was decision one. The other one is nominations of gas from Kiliwani are running below our expectation. We were hoping this would be doing 30 million a day at this time, and it's doing closer to 20. So given that uncertainty about whether nominations from the government would increase and that the revenue stream would increase, we took the decision to focus on Notoria at that time.
Okay, thank you.
Thank you for your questions, Neil, and thank you very much indeed. Thank you.